Netta, thank you for the introduction. And as always, it's really a pleasure to be with you and the folks in the audience. I am Demetrios Xanthos, principal of SAX Insurance Agency. And Netta has asked me today to speak to you about whether to file a claim or not, what exactly should be the evaluation criteria for the board in evaluating when to file a claim, and then what variables do we take into consideration? Deductible, insurable interest, where did this occur? And so, throughout the years, we've discussed that these programs, to deeply get into this topic, could be a 1, 2, 3 hour presentation. But we have 15 minutes together. And so what I want to remind all of the board members in the audience is you have several different policies doing several different things. You have property, general liability, directors and officer, umbrella, excess, crime fidelity, as well as you might carry flood, earthquake, or various forms of catastrophic. And so filing a claim on any one of those topics is uniquely different. When it comes to property, it's going to be first-party property of the association, which can come in several different forms depending on your governing documents, and we're going to explore that. As it relates to a general liability claim, this is going to be solely focused on the common area of the association, and all of you in the audience have varying forms of common area. Some of you just might have greenbelt, some of you might have sidewalks, some of you might be mid-rise, high-rise, might be condo. You might have elevators, stairwells, exercise rooms. And so, as you can see, that creates a variety of different claim opportunity. Obviously, with your directors and officers, that has to do with allegations brought against the board, alleging some sort of negligence in the way you're directing the association. So what I'm going to focus on today over the next 10 minutes is a first-party property claim. I'm going to focus on a first-party property claim as it relates to water. So we're going to take a situation. We've got a condo owner in a unit that contacts management saying he or she has experienced a water loss in the unit. Now, the variables we first need to review is, what do the insurance section of the governing documents say are the association's insurable interest? And the reason that's so important is to all of you out there, you all have a unique set of governing documents. And so we'll take all three scenarios. In one scenario, your governing documents might say that the HOA has an insurable interest up to unfinished drywall and electrical and plumbing stub out. That's commonly known as a bare walls policy. Many of them write that they have an insurable interest up to a standard interior as installed by the declarant. Now, over time, and we've talked about this topic before, those can become very problematic because unit owners do what? They make changes to their unit, and normally they make upgrades to their unit. The last one, and it's very rare, but I have seen it, and it's in older governing documents, places the burden of the association and the entire unit, including improvements, on the HOA. Again, that might seem extreme, but I have experienced governing documents that are responsible for the entire interior. So, to our example, a water loss in a unit. If it is under the bare walls policy and the association has a $10,000 deductible, it's likely that the interests of the association impacted will not meet the association's deductible. But before we can just not disregard, because I think that's the wrong word, but tell the unit owner that there's really no assistance for them under the association's policy, we need to be conscious of the fact that each homeowner pays his or her monthly assessments, And part of those monthly assessments goes towards the association's insurance. So they have a legal right to the insurance afforded to the HOA. And in many cases, the carriers insuring the unit owner will require a declination from the association's insurance to get involved. And I will tell you, and I know I've got some clients in the audience, it's very frustrating when you know that your insurance will not be involved in the claim, but yet I'm instructing you to file a claim on behalf of your unit owner so that your unit owner can get the proper documentation so that their HO6 policy will step up and remedy them. And again, I want to impress, that has to be one of the most frustrating situations, but please understand, it will be a claim, it will be closed, and it will show as a zero payout and have no impact on your insurance. Moving to the next scenario where the HOA does bear some type of interior exposure. For this example, let's say initially installed flooring, cabinetry, but exclusive of wall coverings. Again, we need to take that deductible into account. Is it $2,500? Is it $5,000? Is it $10,000? Hopefully, the unit owner gives the manager access so that we can, at least from the water remediation company, determine an approximate exposure so that that exposure can say, hey, look, we're looking at a minimum of $30,000 loss. Your association's deductible is $10,000. It looks like a majority of the things impacted you have an insurable interest in per the governing documents, and we really need to file a claim and file it quickly for your unit owner. I have experienced many scenarios where the exposure and the loss almost is very close, within hundreds or thousands of dollars of the association's deductible. In that scenario, working with your insurance professional, you should really determine, does it economically make sense to file a claim, to have the association receive a check for $1,500, $1,800? I'm not saying they shouldn't, but I think your insurance professional can explain to you the impact that type of loss is going to have on your policy. Now, without completely going off the rails, and we've discussed this before in open forum, and I just want to plant the seed. Typically, the way you are evaluated as a client by an insurance company is they take the total premiums that you've paid for 3 consecutive years, and they divide that by the claims in which you've filed. So obviously, if you have a smaller percentage, you're in very good shape. If, for example, over a 3-year period, you've paid insurance company A $57,000, but in the same period, you've filed claims for $60,000, you can quickly see that you're going to have a very poor loss ratio. And some of you might have experienced either A, significant increases, or possibly a non-renewal. Again, sticking to what Netta and HOA wanted me to discuss, this is something where your insurance professional, he or she, should be able to lead you into what kind of situation this type of claim can have on your insurance. The last scenario we discussed was potentially an HOA which has extensive exposure to the interior of the unit. In this particular case, again, we still want to ascertain, what does the claim value look like? Is it in excess of the association's deductible? And would it be prudent to either handle in-house or file a claim? Now, again, there's a lot of deliberation around what happened, why did it happen, who caused it, And this is where I would like the board members and membership in the I want to say audience, right? You're streaming at home, to remember that a majority of your governing documents are written on the platform of a mutual waiver of subrogation, which means regardless of cause, each party is responsible for their own insurable interest. Now, again, you may have already heard from our friend Adrian Adams, and for those of you who've attended in the past, he kind of emphasized that, that language is really there to protect the unit owner. Because if the unit owner is the cause of the fire or water loss that damages 3/4 of the building, this language inhibits the HOA from pursuing that unit owner for that full amount. Conversely, if it's an HOA generated loss, a burst pipe in a common area, this mutual waiver of subrogation affords that the unit owner can't pursue the HOA for things that you don't have an interest in, their personal property, potentially their improvements, potentially anything inside their unit if you are in a bare walls policy. I think, the last thing that I want to focus on in this conversation is, and I've said this for years to everyone, every insurance policy is not created equal, meaning every insurance company, whether it be Travelers, Philadelphia Insurance, AmTrust, State Farm, Farmers, on and on and on, Allied Insurance, Liberty Mutual, they all have specific policy language in their insuring agreement. And so we have to remember that that's going to dictate how the insurance company sees how the insurance is triggered. And again, you really can't evaluate your specific claim without interacting with your current insurance professional, who I'm sure is knowledgeable about the carrier and the insurance policy they've put in place for you and how their insuring agreement works. Last, I want to close with, over the last 10, 12 minutes I've been speaking, in no way, shape, or form am I advocating to not file a claim on behalf of a unit owner when the association clearly has an insurable interest. What I would say to everyone out there is, within a 24 to 48 hour period, hopefully you can garner enough information about what occurred, when it occurred, what approximately appears to be impacted, what approximately appears to be the costs associated, and then interact with your property manager and your insurance agent, he or she, and use the very simple steps I've discussed to determine, does it make sense to file a claim? A, does the association have an insurable interest in what was impacted? B, do we have a sense of what those costs are? C, do those costs equal or greatly exceed the association's deductible? And last but not least, what is the best course of option for the association and the unit owner? So once again, I'm really thankful to be with you again. And I hope you all stay safe and healthy. And I know we're all going to get through these trying times. Thank you so much.